to get focused with Focus on Investing.
You gather around, hustlers. That's if you're still living. This is Focus on Investing, and I am focused. The time is now 5 minutes past 8 on Sunday, the 17th of August of April, 2022. This is the first live stream for Focus on Investing. It's the first of many to come, hopefully. Hopefully we're looking to do a live stream every Sunday at 8 p.m. Well, this is 8 p.m. UK time. I think that works out to, what is that Eastern? Is it 3 p.m. Eastern? And then it's that 11 Pacific, I think. My timings, my timings ain't great with the international stuff, but I think that's correct, right? It's a bit complicated when you start having the time zone changes and all of those sorts of things, So it's a bit tricky to kind of work out the differences. Also, this is kind of my first stream, so still kind of figuring out how to work things, get things going. I might have a few technical difficulties, so you might have to bear with me until I get things going. But we're here. Focus on Investing live streams. Every Sunday. And if it goes well, I might do another one during the week. So that's really the aim, and it's really to help you guys really get more involved in trading. There's a lot of people that hear about trading and kind of don't really have a good idea. And not even only that, it's that when we talk about trading, there's a lot of misinformation out there. Let me bring up my charts just to give you something interesting to look at. 1 second. Let me go. Let me choose this here. All right, now there we go. I'll have some of that. Is that one better than this? I'm not sure. I think maybe which one is better? I think maybe this one, you get a better view of the screen and that. So the aim for our live streams is essentially just to introduce people into getting into trading. A lot of people hear a lot about trading. They get a lot of misinformation as to what trading is exactly. There's a lot of misinformation out there on the internet. Not only on the internet, I mean, if you do any sort of searching on the internet for any sort of financial information, you know how YouTube does, how Google does. Anytime you search for anything, they're all in your business, dancing, all in the videos. They're giving you whatever whatever you search for. They're giving you a whole lot of suggestions for other things, and you're always getting up these ads popping up of people talking about, we've got some fancy trading strategy and this and how much we made and how much you can make and all different types of things like this. And trading is like anything. In anything in life, there are good things or good ways to do things, and there are bad ways to do things. And I generally find that a lot of the things to do with trading are generally they're usually done more on the hype side of the game, meaning they're more based on fancy sales tactics, fancy sales strategy, rather than actually taking time to teach you the principles of trading, teaching you the correct setup, teaching you how everything is supposed to go. And it's more just about fancy numbers, giving you, saying, oh, this is how much you can make, or we did this how much in how many hours, and all of those things. If you really understand trading, those things are kind of really irrelevant. And we could maybe get into that a bit later as to why they're irrelevant. But it's easy to, bamboozle people who don't really understand trading by giving them, fancy numbers or giving them fancy amounts, because obviously you have no real knowledge of what the relativity of these things are or how it relates to anything, right? So I'll tell you the story of how I ended up getting into trading. um it's something that I've always known about trading for a long time, but it never really interested me at the time. And it was something that my mom kept telling me to, yeah, go get involved in trading. It might be something for you, get involved in trading. Long story short, what ended up happening was that you know she ended up getting, I can't remember if she got some tickets or she did something and invited me to a whole trading event. I went down, it was a big snazzy appeal, like big show in a hotel. All the lights were going, the music was pumping, all of that was going on, right? And it was a lot of hype based thing. Um, and I ended up signing up, and I think I paid half the deposit. It was X amount of thousands for the course. And then I realized, like, a few days later that, actually this thing isn't really the thing. So it took me a little while to get my money back. And then what ended up happening was, because me and my mom went to this original one, there was kind of an interest peak by my mom in trading. So she ended up finding like a coupon, like a Groupon coupon to like a smaller event. And it was just literally a small event, two guys in a small little room. It was also in a hotel, but it wasn't no fancy lights and fancy noise and fancy music and all of those sorts of things. It was essentially just, you know, a small room and a guy just teaching. And what was interesting is, the thing that had the none of the snazziness, none of the big, fancy lights going and all of those sorts of things. That was actually the thing that had, the most value in terms of teaching you the strategy, giving me understanding of, what this whole trading thing is and all of that. And as I said, it's not always the most snazziest, the most fanciest, um, presentation that is necessarily going to be the one that's going to teach you the most. And what was interesting also, they used to have this thing called round the clock trader. And it essentially was like, I think it was like 24 hours of traders, people doing trading. Um, and what ended up happening was my teacher had a time slot on this round the clock trader. And essentially, as I said, it was 24 hours of different traders teaching different strategies. But because my teacher was so good, it allowed me to, you know, understand the principles of trading. So because he allowed me to have the understand the principles of trading, it was like I could basically see through all of the other nonsense strategies that were going on, right? So, you know, we can see all of the, we could see all of the what do you want to call it? Like the bamboozlement, all the bamboozlement of the other traders, right? So hold on, give me 1 second. Update the title of the stream. Bear with me. Yeah. So yeah, so yeah, so it allowed me, excuse me, yeah, so it allowed me to understand what all these other traders were doing, right? And you know, and because it allowed me to because I had that, and I could see through all of their different tactics. I could understand that most traders and what they teach is basically nonsense. Like there's, you know, they're teaching you all hype, or teaching you, you know, to take too much risk on a trade. So let me just check to make sure that my audio levels are coming in correctly. 1 second. Yeah. Yeah, okay. So my levels are correct. Yeah, so um yeah, so when we was in this round the clock trader thing, it allowed me to understand that, you know, that most traders don't really teach you anything of, I shouldn't say anything of substance, but a lot of the things that traders do, you know, with this trading thing, there's people that gravitate to the fact that, you know, you don't know what you're doing. So what would essentially happen is that they will give you all of the snazzy details. Of you, as I said, all of the high numbers and things like that, and there's no real relevance to that sort of stuff. So my aim here with this focus on investing is to really, you know, teach you guys how to do trading correctly. You know, how to get into trading, how to um you know, not over leverage yourself, not to put too much risk, because anybody, you know, I could tell you a number that I made certain amount in certain amount hours or in a certain amount of days or whatever. But, you know, what they don't tell you is that, you know, there's an element of risk to anything, right? At the end of the day, what we're doing in trading is speculating. Um, it's a step up. Well, if you do it correctly, it's a step up from gambling, right? A lot of people don't do the step up from gambling. A lot of people actually gamble, but essentially, you're having a seed amount of money that you're putting at risk in, and you're speculating, you know, which way the markets will go, which way an asset will go, which way a stock will go, which way a commodity will go, which way, you know, currency pairs will go, you know, which way cryptocurrency will go. Whatever it is that you're putting your money on, you're actually, you know, betting or risking your money that it's going to go in a certain direction, right? So, you know, and the aim is to get a better return on your money than you put down. So there's always risk involved whenever you're talking about investing. So me telling you how much I made in certain amount of days or certain amount of hours doesn't mean anything if you don't know how much I risk, right? So I could say, well, I made £1,000 in 1 day. So you might think, oh, that's good, right? But what if I put down 1 billion? I put down 1 billion and made 1,000. You know, it's nothing. It's very small amounts. It's different to if I put down, you know, £1, I made £1,000. It's a completely different equation or completely different ratio, right? So, you know, that's just kind of like a quick example of, you know, how people can bamboozle you with numbers and figures if you really don't know what, you know, trading is really about. All right. So with all that said, um you know, here we purposely focus on technical analysis. Well, why do we focus on technical analysis? We focus on technical analysis because, you know, fundamental analysis is based on news, noise, and opinions. Basically, fundamental analysis is basically based on he said, she said. He said or she said that they think that the price is going to do this, or they think that the company is going to do that. And at the end of the day, all of those things are opinions. Whereas if we're talking about technical analysis is dealing with the charts, right? We're dealing with what the numbers are on the charts and exactly what is shown for price is actual price action. We're actually looking at what the price actually is, and we're making our trades and decisions based on what we can see that the trades actually are, right? So this is why we go for technical analysis over fundamental analysis, because we're cutting to the chase. We're cutting out, all the opinions, all the noise, all the news, all the confusion, and we're dealing basically with facts. If you want to know more about why we use technical analysis over fundamental analysis, then you can go to the video on our channel. We've got a video on the channel called I think it's called Why You Should Be Using Technical Analysis. So it's called Fundamental versus Technical Analysis. I can't remember. I think I changed the name of the title of the video recently. So so you'd have to check it out on there. But it's on there, right? So what we aim to do with this these live streams is, every Sunday we're gonna start the week off by looking through all of the charts, all of the indices, and seeing exactly where we are in these markets, right? There's no guessing, there's no speculation. We're gonna go straight to the chase and see exactly what state the markets are currently in. And then, if we get some time, we might look at, some other stocks that are doing quite well at the time. And also, if you have any stocks that you would like me to look at and to analyze, then go ahead straight away and put it in the comments. And then we can kind of have a look at that, go through those, and analyze anything that you kind of maybe want to get involved with. All right, so let's get started. We're looking at some of the indexes and some of the indices. The first indice that we're going to start looking at is the US dollar index futures. And it's called, the ticker symbol is DX1 apostrophe. Now, the reason why we want to look at these indices is, again, so the question that we're asking today, the bear market, is the bear market dead, right? So, the beginning of this year has been a very rough and rocky start to the markets. We had a situation where, a lot of the economies have kind of gone downhill. They tanked. We've just got over this whole COVID thing. We've had the whole pandemic. We've had, everything with the markets have kind of fell down, and it's been a rocky start to, the beginning of the year, because we're just recovering, supply lines and supply chains and, food shortages and all of those things that have been going on, have been taking place. So it's kind of like we were just about to get back on our feet, and then whoop, beginning of the year, we have all of this, the decline in the economy and all of these things, and then we had this conflict going on in Europe that kind of came on top of it. The excuse was that, this conflict is the reason as to why we're seeing these markets dip down at the beginning of the year. If you've been paying attention, you'd know that it was actually dipping down before the conflict, even started, or even officially started, right? So, there's been a lot going on at the beginning of the year, and if you understand how to read the charts and understand the charts, you actually would realize that with a lot of these indexes or these indices, we actually went into a bear market in some of these, and there are certain, chart patterns or chart signals that indicate to you that we are actually in a bear market, right? So, whether or not that means you should implement bear market strategies, or what you should do in those situations. Should you stand aside? Should you implement bear market strategies? Should you continue with your bull market strategies? These are all things that, we're here to kind of analyze and discuss. And as the markets change and as we go through the markets, it's something for us to focus on, or something that we can do, right? So, we went through this rough and rocky start. So, we have been like in this situation for quite a bit of time. So, my aim today is to basically answer, are we still in the bear market, or has price or the markets turned themselves around, right? So, let's get started and start to analyze this with our indices. So the first one, as I said, we're looking at is the US dollar index futures. The ticker symbol is DX1 apostrophe. This is our 4-screen setup. This is our special focus on investing template. And if you look on the charts, you can see that we have special indicators. These are indicated by like these dots and these lines on the charts. These indicators are bespoke, custom coded indicators by Focus on Investing. These are indicators that I coded myself. And these indicators allow us to analyze the charts quicker and a lot better as well. Let me add this one I switched off. 1 second. Got this one here. Yeah, so these allow us to analyze the charts more quickly in one glance, and we can get an easy reading of the charts to understand what's really happening with the charts. All right, so what we're going to do is we're going to look at the indices to analyze, are we still in the bear market, or have we recovered from this bear market, and what the kind of situation is going forward. All right, so we're going to start with our first chart, which is the monthly time frame on the US dollar index. It's always good to look at the monthly time frame, because the monthly time frame gives you a wider overview of the entire charts, right? So if we start here, let me get my arrow tool right here. We can see that, coming from August 11, 2011, we can see that the charts, themselves were quite bullish, raising up. We saw a massive growth in the US dollar index futures from, July 2014 all the way up to March 2015. We saw kind of months on growth on growth on growth. And then we hit this kind of area of sideways consolidation. Let me draw it for you. So you can see this part here is essentially one sort of big area of consolidation. Yeah, it's slightly bullish, but you can see massive pullbacks. It's nothing serious. And then we ended up having a situation where we had, a level of resistance here. Price never seemed to manage to rise above it. It kind of topped out the market at this sort of price. This is the 103.865 level. Price kept pulling backwards and forwards. But if you look carefully, you can see this whole area is really just one big area of consolidation. If we pull it back like this, you can see it's actually just one long area of consolidation. Yeah, we had a little peak above it, a little peak below it, but it's really one big sideways movement of consolidation, right? So if we zoom in a bit closer to today's kind of time frame, we can see that we reached our high minus this, spiking peak in March 2020, which is the whole pandemic sort of time. We can see that since May 2020, the actual market actually took quite a big steep downwards term. So we've been going down in this market since 2020. What's up, Vino? Good to see you here, brother. Give you a little show on the screen. Thank you for joining us for our live stream. Any questions you got and that you can put it in the chat and we can get to it. We're just doing our live, review of the stocks for the beginning of the week, looking at the markets and see where we're at currently. So yeah, so what I was saying, so since the beginning of 2020, the markets have actually been on a downward spiral. They would tell you that, this is recent thing due to the beginning of the year, the first few months, but you can actually see that the market has been on a downward decline. And it's not until we get to June 2021 that you can actually see that we've actually been very bullish since that time, right? You would expect to see a massive dip, at the beginning of the year. We can see the beginning of the year was here. We had, January and February, but January was actually a green candle. If you look at this bar, it's actually a green candlestick. So we did actually have growth in January, right? And it's only February. We would think that we had like a downturn in the market, as you keep being told that, oh, the market was down and things like that. But if you look at February, February was actually an indecision candle. Look, it came in and exited at the same price. Yeah, we had movement during the month. Price rose up and price fell down, but it wasn't actually really a bearish candle. It was actually, a candle or a bar that showed that, the market was actually, came in and exited at the same price, right? So when you're talking about, people saying, oh, the market is down, well, you have to be specific in what markets are down, because even though, the economy or certain areas of the economy may be down and certain markets may be down, it doesn't mean that certain stocks are not up. Even in a bear market, you can still have bullish stocks, right? So this is what people don't really understand. The indices are just that. It's an indices. It's kind of like indices and the word indicator are very similar to each other, right? So we're talking about indicators of what the market is doing. Whenever you're talking about indices, generally what you find in indices it's a collection of a certain different amount of stocks, right? So, it might be the top 500 stocks in a certain market or a certain industry, right? And what the indices do, they average out the value of all 500 of those stocks and then print it as one chart in order for you to get a reading of the overall market, right? But don't forget, it's a view of the overall market. Just because the overall market might be down, it doesn't mean that certain stocks might not be up. Just because the overall market is up, it doesn't mean that certain stocks might not be down, right? So we're talking about knowing how to utilize indices as an overarching view, but then not getting confused and getting it twisted, thinking that because the market is down, that every stock within the market is down, right? I mean, even now, most people would say that, the economy is down, right? But if I was to ask you, do you think that oil stocks are down, or gasoline or petrol stocks are up or down? Which one would you say? Most likely you would say they're up, even though the economy is down, right? So, here in England, they've just done a massive hike in terms of energy prices, right? Energy prices, like I think like gas and electricity has gone up by 50%, like a massive hike. So even though the economy, may be seen as down, it doesn't mean that there are not, stocks or industries or areas for you to capitalize on making money, even when the market appears to be down. It's very rare, damn near impossible for the whole market to be down all at one time, right? Because there's going to always be areas on when one side is down, the other side is up. And this is also why, here at Focus on Investing, we don't just focus on stocks. We don't just focus on Forex. We don't just focus on commodities. We don't just focus on crypto. We focus on all of them because, money moves around. Where the stocks might be down, commodities might be up. We know recently that, while the economy was so-called down, we know that there was a massive spike in commodities. We know that gold went up. Again, we know that oil went up. We know that there's different assets, palladium and various different things that went up at the same time, right? So, staying in one area of trading is not good for your portfolio, right? Because money moves around just like the economy moves around. It ebbs, it flows, it grows, it shrinks, right? So, you need to have a strategy that allows you to be flexible to move to whatever, industry is up at the time, right? So when the money moves, you move with it. So you can always find an angle to be making money rather than having to sit out the lows and troughs in the economy, right? So this is what we're looking at doing, right? So if we get back to this US dollar index futures, we can see that even though, we've heard that these markets and indices have been down, we can actually see that this market has been growing, or this indice has been growing since the 1st of June 2021. So we've seen non-stop constant growth in this indice. If we take a closer look on the daily time frame, we can see here, like if we look at our trend filter, we see our trend filter is non-stop green. Yeah, we've got a few little red patches here, but they're only brief patches for a few days, maybe a week, 2 weeks at a time. So that shows you that because we've got the trend filter is green, it shows you that the indice is very, very bullish, right? We can also see that price is trading above our moving averages. We have our 3 moving averages here. We have the 20 simple moving average, the 50 simple moving average, and the 200 simple moving average. And price is currently trading above all 3 of our averages. Not only is it trading above all 3 of our averages, we can actually see that there's, you know, good space and good gap in between each one of the moving averages and price, right? So this is showing very bullish activity that we're seeing here, right? Even over the recent days, we can see we had a small slight consolidation here, but price has actually broken out of this small sideways consolidation in order to go to the upside. So we can see that, you know, we can expect that these US dollar index futures to continue to go on to the upside, and we can expect to see a massive amount of growth for this chart. If we was to kind of say price is probably around here, we can see that this lines up to our consolidation area from around, you know, April 2020. So we're looking at, you know, just post you know, the pandemic times, right? We're just riding at that. And I think that this is going to be quite a significant area. If we draw, we see we draw on the top of this kind of consolidation area. If we draw the bottom of the consolidation area, we can see that exactly how it corresponds to today's time, right? We can see that, you know, leading up to it, this bottom level of support was acting as a level of resistance during March of this year. And when price broke through that level of resistance, it turned it into a level of support. And now we're back in this channel, this pandemic channel that we had here. You know, because we've got upward momentum, we can look to see that maybe the indice is going to go back to our, you can see here, we've got our green line. This green line represents, you know, key pivot support and resistance levels. So this is indicating a good, strong resistance level at the top here is a pivot level. So if I highlight it with a line, we can see that, you know, we can expect probably price to continue up to this. If it breaks through this level of resistance, it's got lots of clear air going all the way to this high of the market that we have here at this 103 level, right? But also remember, we have our round number of 100, and this is why price is consolidating at this price. Remember, price always, you know, has hang-ups whenever we talk about strong round numbers. So 100 is a strong round number for price. So it's going to take quite a bit for, you know, price to actually break through this 100 mark and continue to the upside. But once it does, we've got clear air between where we are at our resistance level and where this this new high of this indice is going to be. So remember, as the indice rises higher, it generally brings all the stocks on it with it. So if the indices is acting very bullish, then each one of these stocks that are on this index would also act very bullish, right? So it might be something to look out for when we see this break and close above this $100 level, that we're going to see all the stocks on this indice go up with it. All right, so let's take a look at our next indice. We're going to have a look at the UK 100 index. Again, let's take a look at our monthly time frame. Our monthly time frame gives us a better overview. So if we look at, again, similar story, when we're talking about, you know, the dip from the pandemic times, price dipped from there, and then since then, again, very similar story, continued growth from pandemic times all the way up to now. If we go to, again, January, beginning of this year, was actually a green bar, so a green candlestick. So we actually had growth at the beginning of this year. And again, similar story where we have a kind of an indecision candle. If we go to our daily time frame, let's zoom in a bit better. We can see a similar story. We can see that our trend filter is actually green. So we kind of turned to a green trend filter, you know, from the 18th of March. So what we now 17th of August, 17th of April. So you can see it's over this past month that price has actually come back to its past. So when you really think about it, all of this talk about, prices being down or we've been bearish at the beginning of the year, are we still in a bear market? This is the question, right? Because if you look at where our, at the beginning of, the year where we had all of this dip is at this level here. This is our 7672 level, right? But where is price now? Price is actually back at that level, right? So we can see that we've actually fully recovered when it comes to the UK 100 index or UK stocks. UK stocks have come right back up to our previous high. If we zoom out a little bit, we can see that we're back at our all-time high levels, right? So we had our high levels here, January 2020. If we look here, this is the whole pandemic situation. And then since that, the recovery since the pandemic has been bullish, slowly and steady, and it's risen us all the way back to this top again, right? So, don't get fooled and twisted by, the news, noise, and rhetoric. This is why I say we always deal with technical analysis, right? Because if you were to listen to the news, noise, and opinions, they'll be telling you that, the market is down at the moment. This is a bad time for the market. It's down, whoop to whoop to whoop. But if you look at the charts are telling you something different. The answers are always in the charts. They're never in, news, noise, and opinions and things like that. The charts always give you the truth about what is happening. If you know how to read charts, then you understand what's really happening in the market. So when people tell you that the market is down, it's not actually down. Yes, it did dip down from, where do you want to say? You want to say from 10th, 11th of February, we saw that the markets took a sharp decline, came all the way down here. But you can see that, that this chart never actually went bearish. It had a pullback, it had a dip, but it never actually went bearish. But now, as of the 8th of April, you can see that we're actually recovered from this and we're actually back at our all-time highs, right? So, this is definitely an indice that you could look at stocks to invest in because it's back at all-time highs and we're back at our recovery level, right? So again, this is why I say don't listen to the news, noise, and opinions that are the market is bearish, the market is down at the moment, that you can't invest into any stocks. No, you can invest into stocks at the moment if you know how to pick them off of the right indices and how to find them, right? So there is definitely opportunities to be had here. If you look at the UK 100 index, if we look at the chart, we can see that again, trend filter is green, which is a good sign, which means it's bullish. We can see that if we look at our moving averages, we have price above our 20 simple moving average, 20 simple moving average above our 50 simple moving average, and the 50 simple moving average above our 200 simple moving average. And again, we're seeing clear air and clear space between all three of our indicators. For those that don't know, the moving averages basically indicate the average value of a stock, right? So each one of these lines represents the average value over a certain amount of time, right? So the black line, which is the 200 simple moving average, represents the average value of the stock over 200 days, where the blue line represents the average value of the stock over 20 days. So this is why you're seeing more volatility with the blue line. It's got more ups and downs than the black line because it's a short distance. So it's more likely to react to price. Well, why are these lines important? These lines are important because it gives you a gauge as to where the stock is relative to itself, right? So it's no good just having a single line of a certain price, right? Because each stock is different. Each stock has its own different nature. It has its own volatility. Remember, these stocks are representative of companies, and companies are basically groups of people all to come together for a certain mission, right? So each company has its own ethos. Each company has a different service, a different product. So each one of them is going to operate differently. Some are going to be more successful than others. So this is why it's a good idea to have an indicator that represents its stock based on its own self, right? There's no point trying to, say for instance, compare Blockbuster Video stock to Netflix stock, right? They're two completely different companies, and two different completely stocks, right? So the reason why the moving averages are good, because it's talking about the average of itself, right? So whenever you see price trading above its averages, it's just that price is trading above its average, the average of itself, right? So when we see trading above the 20 average, the 50 average, and the 200 average on all three of these different time frames, price is exceeding its average. And you can look at it just by, you can tell just by looking at it that the shape is going upwards and to the right, right? So you can see it's constantly growing. It's going forward with growth, and that growth is just the indicators are just an easy way to identify the growth. Now, whenever you see the indicators crossing over each other, this is showing you sideways movement. So this is showing you that the growth of the stock isn't great, especially if they're not ordered from fastest at the top to slowest at the bottom. Whenever you see crossing over each other, this is showing you that there's sideways movement, or there's a stunt in the growth of the stock, right? So this whole cross here, if you look at this cross of the 20 simple moving average over the 50 simple moving average, is indicating this big dip here. This is the big dip that we had from the beginning of the year, from January, February times. This is what this is indicating. But remember, the moving averages are lagging indicators, meaning they just confirm what price has done, right? It's not telling you, what's happening in the future. It's just confirming to you what price has done in the past, right? So this is confirming for you here, this big dip here, right? So the fact that we're trading above all of these averages is a good sign for this market. And again, UK stocks is something that you guys might want to start looking into in terms of, something to get invested in. As I said, we're just at the point of our all-time highs. And then, any kind of break and close above this 7672 level, we're going to be looking at all-time high of the market. And again, all-time high of the market generally means that it's going to take UK stocks with it, right? So that might be something to look out for. If we take a look at our next indice, which is the S&P 500. Now we're moving on to these stocks. All right. So the S&P 500, the main US markets we're looking at now. Now we can see a slightly different shape, right? We can see that again, continued growth on the monthly time frame of the S&P 500, all the way up until December and January. But what do you know is different about these charts or this indice than you notice differently about the UK ones? Well, what's different about it is that we actually are seeing some bearish candles, right? On the other ones where we saw mostly indecision candles when we came to January, February, here we're actually seeing a strong bearish candle. Look how strong this candlestick is, or this bar. It's got a strong body and a strong long wick. So this is indicating that we did have quite a bit of bearish movement for this indice. Not only that, you can see that it fell down and it kind of pulled back, and then it kind of stayed at this level. Let me draw. It's my little down arrow. And then you can see it stayed at this level, right? So it didn't actually recover back to our high, which is here. So you can see that this market actually did take a hit. It did take a hit and fell backwards, right? So yeah, so we can actually see that it fell back. So if we go back and look at the daily time frame, we can take a closer look as to what really happened here. If we zoom in, we can see that if we indicate our high level, this is indicated by our indicator here with the dash line. This green dash line indicates a resistance level. It's a key pivot resistance level for this stock. So if we draw this line here, this represents our high, or our resistance line for this stock, which is the all-time high. We can notice that price started falling from the 5th of January. So it's a lot earlier than our UK stocks or UK charts. Our UK charts fell around the 10th or 11th, right? So very early indication of downwards movement for this stock. We can see that it fell all the way down, even including, like, it had a few pullbacks, and we had our low here on the 24th of February, right? But the key thing that you got to look for on this stock is this chart symbol, this here. Let me ask the chat. Does anybody in the chat know what this symbol is here? Right, where I've put this, what this chart pattern is called here? Why I've marked it on the charts. Let me give the chat a few seconds to see if anybody knows what this chart symbol here is called and why it's significant. Let me draw it in pen for you. This little thing that I'm circling here. Does anybody in the chat know, number one, what's the name of this chart pattern here and why it's significant? Let me see if anybody knows. No? I know there's a bit of a delay on the stream, so I'm trying to give you a chance if you're trying to write your answer in. All right, I'll tell you. So again, this is why the moving averages are important, right? So again, we have our 3 moving average. Hey, welcome, Cecilia. Sorry, Celia, not Cecilia. You see a double top. Okay, so the double top is here. This would be our double top pattern here, right? So for those who don't know, our double top pattern is, let me draw it for you. Let me get rid of this. A double top is here. When you see price go up, it pulls back down, comes back up again here, and pulls back down again. So this is what we would call a double top pattern, right? Let me clear this so it's a bit easier to read, right? So what a double top pattern is an indication that price is intending to go higher, but it's struggling to go up, right? So this is a double top here because if I draw our level of resistance, our level of resistance is here, right? And as I said previously, so this is an indication that the price is attempting to go higher, but it's struggling to break through this level of resistance. So this level of resistance is here at 4594, right? But it's not having enough energy and momentum. You got to remember that, you know, these, I said, it's kind of hard to kind of understand, but each chart or each stock or currency, it has its own nature, it has its own flow, right? It's almost like a living entity, each company is a living entity, right? You know, companies go through phases, they have ups and downs, they have various different things going on with them, right? And this is all reflected in the charts, right? So what a double top represents is, you know, the energy or the will of, you know, the market for price to go up and break through this, you know, level of resistance. So we have to understand with trading is it's kind of like a self-fulfilling prophecy, right? It's the way the charts work. It's a lot of it is based on psychology. You know, at the end of the day, all of this is based on humans and human nature, right? These prices don't come up with themselves, right? It's actually humans that decide, you know, what they think something is valued or what they think something is worth, right? So if, you know, I brought out the latest car, right? And I told you that this car is worth 100 grand, right? That's an opinion of a human, and then it's up to other humans to validate that price by either buying it or not. So if it's a $100,000 car or £100,000 car, and I sell it for $1 million, then the market is not going to go for it. Well, it's a simple or similar thing with any of these stocks. These valuations and prices are based on opinions. It's like based on like group consensus on what they think the price is. So, you know, if humans think that, you know, a stock is worth a certain amount of money and it's not worth more, collectively, that's how you end up getting resistance levels and support levels, right? These are levels where price will struggle to break through. And unless there's some kind of significant action or energy or momentum that happens to the company, like maybe they get a new CEO, or maybe they come with a new product, or maybe the other way around. There's some scandal in the product, you know, they're making food and there was some health scare or something like that. Unless there's some kind of energy to force it past these levels. These levels are like psychological, you know, hard levels. And unless there's some kind of, you know, reason for them to break through these levels, then they won't break through this level. So for whatever reason, this is an indice now. Remember, this is not an individual stock, but the principles are similar, right? So for whatever reason, on this indice, we can see that the market has decided that 4594 is a significant level for this stock. And you can see it is because one thing you will notice about support and resistance levels, they don't just show up once, they show up multiple times. And again, this is each stock or each chart or each indices is individual in nature. So this price specifically for this chart will come up repeatedly again and again and again, and you might not see it on other charts, but it's just to the nature of this chart, right? So if we look at this 4594 level, we can see that, you know, it's here. And remember, these are not specific levels, these are generally areas, right? These are generally areas around a certain price which you know, price would slow down around. So you can see here, around this area that we've had a bounce off of this price level here. We see it again here, a bounce off of this price level here. We've seen it here again off of this price level here. If we go back here, we can see another one here, a bounce off of this price level here. We can see here another bounce off of this price level here. If I flip the arrow around again, we can see here again where prices struggle to break up here, break up above that level here again. And again, you know, if we continue going on, I'm sure that we're going to find these bounces along these lines all the way along again. So when we're talking about a double top, we're talking about price struggling to break through a certain price level, right? It's attempted on the first attempt to break through this level of resistance, and it was unable to do that. So it's kind of like, if you think about trying to kick through a door, like it's a stiff door that you're trying to get through. You know, you go in the first attempt to try and go through the door, you realize that you don't have enough energy and momentum. So what do? You pull back and you back up. So it's a similar thing that the market does. It kind of pulls back on itself, you know, and it says, okay, on this attempt, we don't have enough energy to go through it again. And then we go through for the second time and we try and see if we can go through, and we can see that price still failed to break that. So when you see a double top, then you can see again, it fell back completely all the way down. So when you see a double top, it's an indication that, you know, price is aiming to go higher. You know, it has the will to go higher. It's attempting to go higher. However, it doesn't have the energy to go higher. There's not enough energy in this market for price to go higher. And, you know, when we look at the current world situation and what's happening with the economies, you know, with the conflicts, you know, we're mostly over the pandemic, but, you know, there's signs that we might be seeing a few more lockdowns and more mask wearing and this disruption to the whole economy. We can see why these situations cause, you know, they causes a weakness in the actual indice and the index, right? There's a weakness that says, you know, there's not enough energy, there's not enough enthusiasm in the market for it to break through this stubborn resistance level, right? So this is why we're seeing it bounce off. So yes, you'll be correct, Celia, that this is a double top here. If you, I see you said that there was a double bottom. If you're kind of referring to here, yeah, I guess you could call this a double bottom here. It's a slight one here. It pulls down. It's not the cleanest, but yeah, I guess you could class this little chart pattern here as a double bottom here. I guess you could class that as well. And you know, double bottoms are similar to double tops, as we spoke about previously. The only difference is rather than going higher, it's this one you're referring to, right? Yeah, that one. So rather than it trying to go higher, it's an attempt to go lower, but it doesn't want to go lower. And which is this is a good sign, right? When we're talking about the S&P 500 index, you know, we're thinking about, you know, how the markets have so-called fallen and tanked and we're in free fall and the world is ending and everything from the beginning of the year, right? But actually, you know, when you're seeing things like double bottoms, see price is unwilling, or the market is unwilling to fall further than a certain level. Here's the 4170 area, right? So if we zoom out, we can see that we've hit this area, you know, around kind of April, May 2021 sort of areas. So, you know, somewhere around the pandemic sort of times, you know, we had a bit of resistance. So it's the market is telling us that, you know, we don't see the current times worse than times were around April 2021, May 2021, June 2021. So this is what the market is telling us, which is good. So it means that the market is kind of finding a base, right? So, you know, this is good news for us, especially, you know, if you want to start looking to get into bullish trades. If the market is telling you that, you know, it's actually, you know, stopped free falling for the time being, you know, we don't know what might happen around the corner. Maybe some World War III might break out or something, whatever. But for the time being, the market is telling you that it's found a base at this level and it doesn't want to go lower. We can see actually here as well on the 24th of January, that price kind of came to this area and it acted as a level of support and it held. We can see this level here on the 24th of February, although price did break and close slightly below this area, you can see that it pulled back straight away. So it's an indication that the market doesn't really want to go and fall further than this 4170 level, right? So yeah, so let's get back to the initial question that I said. So this symbol here or chart pattern is what they call a death cross, right? So again, to reiterate, this is based on the moving averages. Again, so we know, as I spoke about earlier, the blue line is a 20 simple moving average, the yellow line is the 50 simple moving average, and the black line is the 200 simple moving average, right? And each one of these lines represents the average value of the stock over a given period of time. The blue line moves the fastest, the black line moves the slowest, and the yellow line moves in the middle, right? So these reflect what the price is doing, right? So, you know, again, in a bullish market, we want to see price trading at the top. We want to see the 20 simple moving average next, the 50 simple moving average after that, and then the 200 simple moving average last. Now, if we were looking at a bearish market and we wanted to see you know, a bearish chart, then what we would like to see is actually the 200 simple moving average at the top. We'd like to see the 50 simple moving average below that, the 20 simple moving average below that, and the price trading below that. And obviously, the bigger the gap in between these moving averages indicates more of the strength of the trend, right? These really measure things like trend. And you know, we should always be trend traders, going along with the trends, right? So if they're moving sideways and crisscrossing above and below each other, it's an indication that the trend is not that strong. And remember, these are lagging indicators. So these indicators actually confirm what the market is doing, right? So if you're unsure of, are we in a bull market, are we in a bear market, are we in a sideways market, a consolidated market, these indicators are the ones that are really going to confirm for you exactly what type of market we're in, right? So as you can see, if we go back to, you know, here around November 2021, we can see everything is rosy. We can see our trend filter is green. We can see that, you know, we've got our 20 above our 50, above our 200. It's great. And then we can see that price here goes through a bit of rough action. We can even see that our trend filter starts to blip in the red a little bit here. And it's evidenced by looking at the shape. We can see, you know, a bit of consolidation up and to downwards. the kind of steep curve that we were having here is starting to level off a bit more, so it's almost flat here. So you can see that the momentum of the stock, or the momentum of price, is actually slowing down. And then it's not until we get to, if you want to say, the 12th of January, 13th of January, this is when we can start seeing price having some bearish action or some downward action, right? So because these are lagging indicators, these are reflecting what price is doing, right? So we're always going to see the 20 moving average react first, which is the blue line. First one to react, first one to tank down. Now, if we look at the black line, which is the 200 simple moving average, because it's a lagging indicator and it's the longest lagging indicator, it's going to take the longest to react, right? So the blue line goes first. the blue line is front line. It's the first one, you know, at the war, the first one to the scene of the crime. You know, it's the blue line is tanking down straight away, but the black line is still going up. If you look at the angle of the black line, it's still going up. It's still representing the upward momentum that we've had going back, you know, from here, still going upwards, right? So it's the last one to know about anything, right? And then somewhere in the middle is the 50 simple moving average. So while all of this, we're having this red trend filter, we're having bearish price action, you know, the markets are going down, we can see that the again, front line, first one is the 20 simple moving average. And then shortly following it is the, excuse me, shortly following it is the 50 simple moving average. So he's going, but the black line is still going on strong. And then if you look further on, eventually what happens is, you know, initially the 20 simple moving average crosses over the 50, which is the first thing. Then it crosses over the 200 simple moving average, which is the second thing. But the significant thing is the 50 simple moving average. You know, historically, the 50 simple moving average and the 200 simple moving average are the historical golden moving averages that are on the chart. So you've got to remember, these lines, we're doing computers now, but back in the day, these lines, you know, had to be drawn by hand. So somebody literally had to get out a ruler and calculate the prices and draw them by hand. So, you know, when something takes this long to do, you want to make sure you have the most important historical lines on the charts. And the most historical lines, important lines on the charts, are the 50 simple moving average and the 200 simple moving average. So if they were going to draw any lines behind, it was going to be the 50 simple moving average and the 200 simple moving average. Why? Because historically, these two lines are the most strongest indicator of what price is doing on the charts, right? So when you see this 50 simple moving average cross from above the 200 from above the 200 simple moving average to below the 200 simple moving average, it's a very significant event, right? So when this crosses up from above to below it, they call it a death cross. So that's the name of this chart pattern, a death cross. So what does a death cross symbolize? The death cross symbolizes a bear market, right? So whenever you see this on the charts, the death cross, the 50 simple moving average crossing below the 200 simple moving average, it's actual confirmation of a bear market, right? So if you're wondering, is it a bear market or is it not? It's that death cross that actually confirms it. But here's the thing, right? Even though it confirms a bear market, remember it's a lagging indicator, right? Because a lagging indicator, it confirms what price has done in the past, right? So this is what is interesting about it. So this death cross here is really representative of, let me clear it to make it a bit easier to see. It's representative of this price movement here. This whole red section here, where we saw the red trend filter, where we saw the market tanking. This happened from, you could say it started from the 5th of January, but we didn't get the death cross or the confirmation of it until the 14th of March. So that's what, January to March, that's like, what, 3 months later, 2.5 months later. So this is why we're having our death cross here. So according to the charts, the chart is a bear market chart, according to the charts. But that's not the whole story, right? Because if you understand how to read charts and understand charts, you understand because it's a lagging indicator, this is confirming that this price action here was bearish, right? Let me draw it. This price action here is bearish. We then got our death cross here, right? But then look at this. Look, if I draw a line here, let me draw a line here. 1 second. If I draw a line here, look at the price since that time. Let me ask chat, right? Is the price since that time bullish or bearish? If we're going to say that this is where we got our death cross on the 14th of March, this is indicated here. This red line is the 14th of March. This is the same day that we got our death cross. This is our confirmation of a bear market. The time since then, would you say that, you know, the price action since that time is bullish or is it bearish? Let me see what chat is saying. I'll give you a few seconds to answer. So we've had our bear market confirmation. We've got our death cross indicated by our moving averages. Our 50 simple moving average has crossed below our 200 simple moving average. It's been confirmed. So Celia says it's bullish since that time. And Celia is correct, right? Because although the market has confirmed to be bearish, it's a confirmation that we're in a bear market. Because it's a lagging indicator, it's confirming past price action, whereas current price action is very bullish. Okay, it's bullish. Yeah, we've got a bit of a pullback here, but it's even pulled back higher. It's not, we've got higher lows. We don't have our where our previous lows were. We're actually having higher lows. So this is why it's interesting, right? When I talk about can you make money in a bear market? Can you find bullish stocks in a bear market? Yes, you can. Not only can you find bullish stocks in a bear market simply because the fact that, you know, a bear market is just an indicator of an index or an indice. You know, an indice, again, to reiterate, is a group of stocks. Like, so for instance, the S&P 500 index is a group of 500 stocks, right, that make up the S&P 500 index. So the index takes the average of all 500 of those stocks. But just because the average is down, it doesn't mean that individual stocks are down. You could have, say it's S&P 500, you could have 499 stocks down, but one stock could be great. You could have 251 are down and the rest are up, right? But the stock the market's just could still show it going down. So again, even though people can read this as a bull market, as a bear market, and say that the markets are down, you can still find bullish stocks and make money with bullish stocks in a bear market. That's just generally of an indice. But even if you take aside the fact that it's an indice that's down, you can still, you know, have bullish action in a bearish market. Does that make sense? Right? Because again, the confirmation of it is a lagging indicator. So here we can see that the market is risen. Now, here's the thing, right? This is our high. Let me clear the chart so it's a bit easier to see. This is our most current high, right? And unlike we saw previously in the previous charts, which was like the UK indices, we could see that in those markets, price came all the way back up to its all-time high. We're back at the high levels again, right? But if we're thinking about, you know, this obviously didn't make it all the way up to the top, right? But at a certain point, you know, this is not, let's draw this, right? So even though we could say that this is a bearish market, right? But then if you look at it again, if I draw a line from, let's say, here to here, this is really just one big sideways movement. This is all in one big consolidation channel. Even if you want to pull it up a little bit to about here, this is just one big sideways movement. You're seeing a consolidation of price going from here, you know, touching the bottom, coming back to the top, coming back to the bottom. It's come up halfway. It's come back to the bottom, come back up to the top, and then come back down to this middle value again, indicated by this dashed line in the middle, right? So question now is this really a bearish market, right? Because a bearish market indicates a market that is falling downwards. And this isn't really falling downwards. This is actually just moving sideways. This is a sideways market rather than a bearish market. So although we had a lot of this, you know, this bullish, this bearish action since the beginning of the year. Yeah, the market tanked for whatever reason. If you want to say it's a conflict, if you want to say it's the end of the bug, if you want to say it's, you know, inflation or badly mismanaged economies and all of those things, whatever the reason is, right? The market tanked at the beginning of the year. But then if you look here, we're really going through a sideways channel. We're not even going downwards anymore. We've actually hit our lows, and then we're coming up and establishing a new low, which is this middle line here. If you look at the indicator, you can see there's a dashed line here. Let me highlight it for you. So it's actually established a whole new level of low here. So the market doesn't want to go any lower, and in fact, it's going sideways. So the question would be, at what point do we stop calling a bear market and start calling a sideways market, right? So even if it does go down, at a certain point, it's going to establish its quote unquote new normal, right? So if it goes sideways long enough, then we're going to establish a new normal, and this will no longer be a low of here. It will no longer be a low of this area here. It will actually be in its own right, its own level. And then we'll establish, you know, this level here as the high. It will start being its own high. So it starts, you know, trading at its own form of highs, and it reestablishes itself in its own sort of level, right? So then you stop looking at it as a bear market, and then you start looking at it as its own market at its own level. It's actually leveled and settled. So then at what point is it time to then start looking at getting back to investing in trades, right? Because we can see on our trend filter is actually green. It's actually showing green action from here. It's pulled back a little bit, but we're actually seeing, you know, some positive recovery from, you know, these levels. All right, so that's the S&P 500. Let's take a look at the Dow Jones and see what the situation is with the Dow Jones. Similar story again. We've been seeing massive growth with the Dow Jones since, you know, March 09, non-stop growth. And then similar thing at the end, we've seen a bit of, you know, sideways movement going towards still quite a bit of growth. And it's not until, you know, January that in this candlestick that we actually see bearish candle, a big strong red body with a long wick, you know, and this has kind of been the indicator of more the US markets than the UK markets. The UK markets never really took such a great downward spiral like that. The UK markets more just went sideways than down, whereas the US markets had quite a big pullback, right? So if we take a closer look, we come out of our monthly time frame and we go to our daily time frame. We reset the chart. We can see that if we go and draw in our high, it's already indicated here by our indicator, which is our key pivot support and resistance level. This green line indicates that it's a resistance level, which is the top. We highlight that. It's a similar story to the Dow Jones as we saw on the S&P 500. We saw price falling all the way down. We can also see price come back for the recovery. And we can also see, again, our death cross here, again, indicating our bear market, right? So, again, this is a bearish market, but we've got recovery here. This whole kind of area here is actually green. We're seeing very similar to the S&P 500. We're seeing lots of green bars and green candlesticks showing that, you know, that it's actually kind of showing, bullish action, even though the overall market is down. If we were to draw our channel, we can see that it's actually going through a bit of sideways action at a new level. Really, it's really just at a new level, and it's establishing itself. These are its resistance levels. We can see that historically, even before the dip, that it had something around this kind of level. This is the 34302 level. It's bounced off it once before, it bounced off it twice, it fell through, but then again pulled back, and it's hovering at this level here. So again, this chart seems to like this this level, and it doesn't seem to be wanting to go lower, and it seems to be establishing itself at this kind of level. So again, more sideways action rather than downward action on this indice here of the Dow Jones, very similar to the S&P 500. And if we go and look at the Nasdaq, our indice, if you pull up the Nasdaq, let's look at the Nasdaq. And actually, the Nasdaq was actually the first one to show bearish signals, a bear market, first one to indicate the bear market. It was actually the Nasdaq Composite that was the first one, and then a few days later, the Nasdaq proper is the one that indicated the full bearishness. And again, you can see similar story. We had very much bullish action, and then we saw a big strong candlestick on January, big strong red body with a strong red wick, good pullback in the market. Kind of, it's almost like a recorrection of the market as to what levels it wanted to be at and what its kind of high level should be. Recorrection, a retracement. And then we've had 3 months of similar price action, price levels at the new levels of this chart. So let's take a closer look on our daily time frame. If we look closer on our daily time frame, we can get a bit more in-depth detail as to what happened. We can see similar growth, and then we started to see the first kind of bit of shakiness. This is actually November 2021, right? So this is before any sort of, conflict in Europe that we've been seeing. So these things happen in the market. We can see here, see those favorite chart patterns, the double bottom forming here, a bit of a double bottom. So even at this point, price is indicating that it's got an eye to try and go lower, but there's not enough reason for price to break down through this support level. Price is looking to go lower, but the market is saying it's a bit too early yet. There's not enough reason, there's not enough energy and momentum to do that. And then it's not until we hit the beginning of the year, then we saw price completely fall through the bottom. Similar story again, all the way down to our support level of 13072. We can see that price fell down there, but again, it established a base. That base is significant. We can see it a few times here. We've actually double bottomed here at around 12th of May and the 20th of May. And then all through this kind of March, May area, this February, March area, it's also had significant, support and resistance levels at that price. And, beginning of January 2021. So, the market is telling you that even though we had all of this turmoil at the beginning of the year, the market doesn't believe that it's worse than it was, during this 2021 era. I think this was like the second wave of the bug that we had. I think that the market is just telling you that it doesn't believe that it's worse than that, right? So having said that, since that time, if we look at price here, again, still a lot of bullish action happening. We had our tank, yes, but price is now showing bullish action, right? So, a lot of these markets seem to be recovering from themselves. If they're not at least recovering, they're actually indicating that they're finding a new normal and a new leveling of their selves. So again, just because people tell you that it's a bull market, that it's a bear market, sorry, and that we're having bearish price action, and that the beginning of the year has been rough, and the markets are down, and the economy and all of that, it doesn't mean that there are not bullish action going on in certain stocks, and doesn't mean that there's not opportunities to go on. And typically what you will find is the way the markets work is they work based on consolidation and then growth. Consolidation and growth. It's kind of like a spring. The longer the consolidation, the longer the growth would be. So we've seen this whole pullback. It's almost like it's charging itself up. So right now is a great time to get into the markets because we're just seeing it break out of all of this kind of pullback. And now we're starting to see some of these stocks go for a great run. If you can get in it at the right time, which is now, you could be in the beginning of a great trend that's going to be running, because we're just getting out of this whole pullback and the market is ready to kind of go for that second run and moving forward. All right, let me answer this question. Celia said, how is it bullish if it's forming a lower low? Well, when you're talking about lower lows, right? Lower lows, what's the best way to say this? Lower lows are, well, it's not forming lower lows because this is the low here. Right, let me indicate for you. So here, so its low was here. Then it formed a lower low here. It formed a lower low here. It formed a lower low here. And this is a similar level, but then it's established a new low here. So this is not lower low. This is a higher low, right? This here is its new low price. You see what I'm saying? This level here would be its new lower price. The wrong one, sorry. This low here, this new price, right? So its previous low was 13072 and its new low is 13880. So it's actually performing higher lows, right? And even higher highs. Well, we'll see, and this is the thing, right? Because whenever you go through the markets are always constantly changing, right? So it's all about where you consider. Now, if you want to consider this level up here as your high, then it's the lower high. If you want to consider this level here, it's at the same highs. If you want to consider its most recent level, its most recent high would have been here. So you can argue that it's making a higher high than its previous level, right? Because don't forget, this whole thing here is kind of like a reset in price, because we've gone through this tank, and as I said, we're kind of establishing ourselves with a new normal, right? So the new normal is suggesting that, okay, if we've established a base here, which we have, we've established this is how low price has gone down, and we don't want to go any lower than this on price. This is our base. So therefore, price is reset itself from the base and go here, because, we don't know how long it might take price to get back to this level. But just because it can't get back to, it might not get back to this level, it doesn't mean that there's not growth, right? Because if we just take, as I said, this section here, if we just take this section between here and here, that's growth. That's very bullish price action. If you just took that section right here, that's bullish price action. So even if you wanted to say, again, that this is a bear market, we've got our death cross and it's bearish, it doesn't mean that you can't find growth or upward momentum in a bear market, right? So don't get confused by the fact that just because it's called a bear market, that everything is bearish. There's no life, there's no growth, nothing is going upwards, nothing is. That is not true at all, right? And I might even go through some, bullish stocks at the moment that are happening in this so-called quote unquote bear market, right? So, don't ever get confused by what these terms mean. Just because something is a bear market doesn't mean that everything, there's no life, it's arid land, it's a desert. No, that's not the case at all. Excuse me. It just means that the indices or the index is reporting a certain chart pattern, and it has a certain suggestion of a direction of the overall charts, right? It doesn't necessarily mean that it's not possible to have any kind of bullish price action. But also remember, just because it's bearish, it doesn't mean that it's bad. You can actually make money in a bear market, right? There are bear market strategies to make money while price is going down, right? So don't get confused with bullish meaning good and bearish meaning bad. It's just a direction of price. As long as price is moving is when you can make money. That's the good thing about price, right? The thing you don't want is sideways movement or consolidation. There is no trend at play there, and it's hard for you to make money when there's no trend at play. You're going to be picking at little scraps and little bits and pieces, right? So it's hard for people to make money when there is no trend happening. All right, so let me take some questions. I've gone through some of the indices. Let me see, is there any questions? Okay, so Celia says, should I look at an area, not a specific point? Good question, Celia. So you should always look at the charts as a whole. So this is why whenever I analyze, so this is our focus on investing 4-screen template setup, right? And we have the monthly time frame, we have the weekly time frame, and we have 2 daily time frames, right? And the reason why we have all of these time frames is because whenever you're analyzing a stock, you want to have an overall view of the stock, right? You don't want to just focus on one small part of the stock. Again, and this is why I always talk about stocks having natures, right? You can see its nature the more you zoom out. It's like anything, there's a saying that says standing back from a situation gives you the perfect view, right? So we want to analyze this stock on all different levels, right? So if we start with the monthly time frame, we can actually let me do it because we're still on the indices. Let me pull up a stock for you guys. Let me pull up what do I want to pull up? Let me pull up. Okay, let me pull up this UK stock. Is that the all right, let me pull up this stock. So again, this is a UK stock that is actually showing to be bullish, right? So this is an example. So we're off of the indices now, and we're on to individual stocks, right? So let's take a look at this individual stock. We look at the monthly time frame. The reason why we want to take a look at an overall area is because we can really start to understand the nature of the stock, right? So what we can notice about stocks when we look back at them is we can see the history or its performance, right? So you can see this has a history of trending well. This has been consistently bullish since February 09. We see nothing but growth from this stock, right? So here's the thing about stocks, right? If it's been like what it's been in the past, it's gonna likely to be in the future, right? So if it's likely to have had good, steady, strong growth in the past, it's likely to have good, strong, steady growth in the future, right? if it's had a very volatile past, it's likely to have a volatile future. Again, remember, all of these stocks are based on companies, and companies are based on people. People is generally based on leadership skill, organization. I mean, I'm sure you guys have had jobs and worked in various different workplaces, right? At certain workplaces, the leadership is good, the organization is good, the system is good, so the company runs smooth. Whereas other jobs, you've been in there, there's chaos, the boss is a bit crazy, don't really know what they're doing, and everything is a bit haywire, things are all over the place, and it reflects in the quality of the product or the service that the place is going on. So because of that, if it's a bad up and down, topsy-turvy service from the company, then what you're going to find is that the customers aren't really going to support it so good. They're not going to be so invested in the company. They're not going to make it a regular habit to shop there. Because of that, the profit line ain't going to be as great. And all of these things are going to affect what it looks like in the stock, right? And this is the nature of the thing, right? By nature, it's a chaotic company, so therefore by nature it'll be a chaotic stock, right? So this is why we always want to zoom out, because we want to, anything we want to invest in or put our money in, we want to understand what it is that we're putting our money into, right? We want to have a proper understanding of where we're putting our seed capital into. Our money is hard earned, so we want to invest it wisely. So you want to look at it well. It's similar thing like if you ever watch like Dragon's Den or Shark Tank, they don't just go, oh, that's a pretty little, I don't know, trinket or whatever it is, let me invest the money. They sit down and ask, well, what's the history of this thing? Where have you been? What is your history? Have you worked for so-and-so company before? What's your experience? All of these things are going back into the history, because the history gives you information about the future. So when we apply it to a stock, we're looking at the nature of the stock. How has it performed in the past? Like, is it smooth? Is the trend of it smooth? Has it had a history of being bullish? Has it had a history of being bearish? Is it sideways? Does it have deep pullbacks and all of these sorts of things? So this is a good example. So this is 31 Infrastructure. This is a UK stock on the London Stock Exchange. Ticker symbol 3-in-1 or 3IN, I should say. Now you can see here, as I said, since March 09, you can see it's had steady growth. And this is what I talk about when I talk about being a proper investor or being a proper stock trader. It's not about doing all the fact. Everybody can talk all day about Tesla. Everyone can talk all day about Amazon, Nike, all of the obvious popular names. Those are the ones that get all the headlines, right? But as a real trader, it's about understanding those stocks that perform well, that necessarily people don't know the names of, right? Then the ones that perform well aren't going to be the ones that you've probably heard of. It's probably some company that you've never heard of before. You don't know what they do, but all you need to know is that this stock is performing well and it's consistently performed well, right? So this is a great example, a company that you've probably never heard of, and its history is of good, steady, ongoing growth throughout the years. Steady. There's no crazy deep pullbacks. I mean, if you look at the pullbacks that it's had, we've got a bit of a pullback here, minuscule. Another pullback here, minuscule. Now remember, no stock is going to go straight up in a straight line. All of them are going to have a bit of a correcting in the price, a bit of a retracement, right? We can see this here, and here, but what we don't want is wild pullbacks, right? The wild pullbacks is, what causes us to be stopped out of our trade. And this is something that we don't want in our trade, right? So we can see here, this is obviously the bug times. This happened to many stocks. So, but even if you look since that bug time, we can see the recovery of the stock. It moves sideways for a little while and then recovered well again. So the reason why we zoom out, the indication is that, if it's trended well like this in the past, steady growth over all of this time, then it's more than likely going to continue to go so in the future. So imagine if you'd have entered your trade here in 09, you wouldn't have been stopped out until 2020. So that's 11 years of growth. If you'd have entered into this stock and set yourself up correctly, you could have had 11 years of growth on this stock, right? So this is on the monthly time frame, right? And then when we go through our focus on investing strategy, we have different things that we look for here again on the weekly time frame. I won't get into it too much now, but there are things that we look on the weekly time frame that reveals a bit more detail than we would have on the monthly time frame, right? The monthly time frame is good for, you know, certain things of our overview, and then we want to really get drilled down deeper into, you know, certain things we're looking for each stock in order for it to qualify for us to look to invest in. Remember, you know, each good trader has what they call an edge, or an edge is what you call as another word for strategy. And a strategy should be a solid checklist. And when I mean a solid checklist, it's not, yeah, my friend's uncle's dog said that so-and-so stock is going to be good this year. That's not a strategy. That's not trading. That's not investing. Again, that's news, noise, and confusion. That's gambling. That's he said, she said, right? For you as a trader, you need to have a certified checklist to whether say, yes, this is, or no, it's not, right? You need to have a clear answer or clear definition as to why you should or you shouldn't invest into a certain trade, right? And, you know, here I'm focused on investing with our strategy. We have clear points, either yes or no. Does this asset meet our criteria for investing? Right, so we look at for certain things on the monthly time frame, certain things on the weekly time frame, and certain things on the daily time frame. And this coincides with our custom coded tools and indicators. So again, as I stated at the beginning of the stream, you know, this is our special template set up, and we've got our special custom coded indicators on the screen. So some of these things that you see on here, you know, you won't be able to find online because we coded them ourselves. But these things give you indication or information about these stocks for you to know at a glance, instant. Like for me to analyze a stock, I can analyze a stock in 10 seconds just by looking at it. Because of the indicators, and I know how to read the indicators. In about 10 seconds, I could tell you whether or not I'm going to invest or not in the stock, right? So this is how quick and how sharp and how efficient you need to be. And not only that, I can tell you exactly why. So I could come back to you 10 years later. You could show me the stock that I invested in, and I could tell you exactly why I invested in it and all the hallmarks and signs of investing in it, right? And this is a good practice. I'll tell you a story. I've been trading for some years now. And when I used to be trading back in, I think this was like 2016 or so. I think it was about 2016 or something along those lines. I was kind of in a space where I was trading, and because of my trades, like I was doing so well, what can happen is you can get private investors that will come to you, and the private investors will come to you and say, well, you're doing so well with your trading. We've got a certain amount of money that we would like you to trade for us, you know, and you trade it for them and you keep certain parts of the profits, etc., etc. But why it's good to have a strong system is because when they come to you asking you to trade their money for them, they'll ask you, well, why did you trade in that stock? You can't tell them that my auntie's friend's neighbor's dog said it was a good tip. That's why I'm getting involved in this, right? There's not a good, you know, reason when you're putting, you know, your cash and capital or somebody else's cash and capital on the line for trading, right? You want to have a solid reason as to why you can say. So let me give you one example. One of the criteria might be, if you look at this stock, you zoom out, this stock is currently trading at all-time highs. It's trading at the highest that it's ever been in its whole entire lifetime. You know, it's, as I said previously before, it's got a good trend of continuous growth over time, and it's continued to go up. And as I said previously before, it doesn't have any deep pullbacks. You know, that might just be some of your reasons, but these are all good reasons as to why this looks like a good stock to invest in, right? These are solid reasons. These are not hearsay. This is not news. This is not noise. This is not opinions. It's not guessing. It's not I feel. I'm not feeling anything with this, right? This is why we do a technical analysis, because technical analysis, everything is identifiable. These are the actual prices of the stock, and we can say for certain exactly what they are and what they're doing. There's no, well, I know someone that works at the company and they said it's none of that behavior, none of that business, right? So each one of these charts, there's something specifically that we're looking for on the monthly time frame, something specifically that we look for on the weekly time frame. And again, we have 2 daily time frames and we use them slightly differently. But if we look here on this final daily time frame, again, we can see that our trend filter is green. We can see that here we're trading again at our all-time highs. We can see our indicator here, this green dashed line is showing that we have a resistance level, and notice that our moving averages are different on each time frame, right? We have our moving averages, which are here, which we have the 50 and the 200 here, which is separate to what we have here. Remember, these are different time frames. This is a daily time frame, whereas this one here is a weekly time frame. So the representation of the moving averages will be different to what it would be here on the daily time frame, right? So answer your question, Celia. Yes, we have, different time frames that we look at for different reasons. We look at the larger time frame for the overall nature of the stock, and then we look at the smaller time frames for us to, get into more minute detail to understand exactly when, where, and how we're going to enter the stock if we're going to enter it, right? So again, trading is about having a wholesome strategy and a wholesome picture of the stock that you're getting involved in, and you have various different checks and balances going along the whole thing just to kind of certify the whole stock and validate it, that to make sure it meets your whole trading strategy, so that you can say yes, either whether or not you want to invest into it or not. We also have another tool here. This is on our final time frame. We have this indicator here. So this little green dash, this green dot underneath this bar, it's called our BOI, or our BOI, our breakout indicator. This indicator tells us specifically what bar to enter into, right? And then we have, these lines here that tells us what price to enter into, where to put our stop loss. And these are all based on, mathematical calculations based on the individual stock. So it's not just a set amount of distance between, that we put for every stock, because every stock, again, the nature of it is different. Going back to what we were saying before, each one acts and behaves differently. So you can't apply the same rule to each one. And instead, you apply a formula that encompasses the behavior or the nature of the stock, that is factored into the calculations, so that you're applying the rules equally across each one, but not the same across each one, if that makes sense, right? So this is something, again, we look for on our final time frame to tell us exactly what bar to enter into, and then we'll know what price to enter into and all different things like this. So yes, you don't look at a specific area, you look at a whole overall, and you look at a specific area at the same time, to understand whether or not you want to invest into the stock. All right, so we've got about 15 minutes left. I just want to know if I want to take any questions. If anyone's got any questions, put it in the chat. We plan to do this every Sunday. Prepare yourself for the week coming ahead. A good overview of the charts for the upcoming week. Get your mind around where the markets are, where the charts are. I said we're going to be here every Sunday. If you haven't done already so, please like the stream. If you'd like to support the stream, I've got the Cash App at the bottom of the screen. I've got the PayPal. Excuse me. But most of all, if you guys really want to learn how to do trading, go to focusoninvesting.io. There we have our full investment syllabus. Our investment syllabus is it's a video series, like about 3 to 5 minute videos, breaking down every little aspect from, what this platform is, how to understand this platform, to breaking down each one of these indicators, to risk management, the whole thing we kind of go through and break down and give you the whole thing. We also give you access to all of these custom coded indicators that help you to read the charts and understand the charts. On top of that, we also do like private, live streams every week where, we can really delve deep into certain things. I can't really give you guys all of the good juice. I mean, I've given you a good stock here that no one's heard of, 3 out, and this is just one of a selection of, these ain't even necessarily the cream of the crop, stocks that we've got. We've even got stock lists where we give you stock lists every week of different stocks to review and invest in. We also have premium trades where it's literally, I just give you the trade and the price to enter in. You just got to put it in your broker and make money. It's that simple. So we do that as well. I also do one-on-one consultations over there, So if you guys really want to get into, proper trading, none of the hype that you see on the internet, people, screaming about the most obvious name brands rather than the stocks that are performing the best and performing well, then go to focusoninvesting.io, and take a look at, our courses on there. All right. So can I repeat the website? Yeah, it's focusoninvesting.io. It's actually scrolling at the bottom of the screen. Excuse me. I don't know if you can read it at the bottom, but it's focusoninvesting.io. It's scrolling. It's actually on my name at the bottom. I don't know if you can. I'm just trying to work out. Does it show? There you go. Focusoninvesting.io in the bottom corner. That's the website you can go to on there. All right. I am completely new to stocks. Is your student subscription for beginners also? Yeah. So our subscription is from the scratch, from the very basics. We literally start you from day one, day dot, and everything, and build it up. The reason why we do that as well, even though a lot of people do have traded before, like as I've said, at the beginning of the stream, I was telling a story about the people who I originally started with. There's a lot of misinformation out there, and it took for me to find a good teacher for me to really understand everything. So we take you from the very beginnings and basics of exactly what this platform is, how to set up the platform, and then we build on it each step by step, right? As I said, our edge or our strategy is a wholesome strategy. So each piece links into one another. So just to kind of go back to what I was saying before about, even all of these different time frames, we're looking for specific things, and we have our specific checklist. If the stock doesn't meet our checklist, we don't invest in it. It's that simple, but it's very clear each one of these steps. But I have to, not only tell you what the step is, but break down why that step, similar to how I explained a bit about the moving averages. I gave a brief detail of the moving averages here, but if you go on our channel, there's actually a video on moving averages and the strategy. But I didn't just tell you if it's above the moving averages, then it's good, or if it's below, it's bad. I told you why it's good, what the moving averages represent. The moving averages represent the average price, why that is important. So it's not just about me telling you what the thing is, it's about me explaining to you, what the indicator is doing. So you have a wholesome understanding of what this strategy is doing, what you're actually doing in the strategy. When you approve, a certain checkpoint on your strategy checklist, you understand why you're entrusting your money for investment based on that indicator, because you understand what the indicator is doing, right? It's not magic. It's not me just telling you, oh, because I said so to do it. Who am I? I'm nobody, right? But these are all indicators based on mathematical principles, and these are things that you can verify. Although it's an indicator, all the indicator is doing is it's saving you time having to, as I said back in the day, they had to plot it by hand. They had to add the values of all of these charts and draw them on by hand. The indicator is allowing you to do it much more quicker. Once you understand what it means, you can look instantly at that indicator and understand what this chart is telling you. So this is why I say to you, I can analyze charts in 10 seconds. And 10 seconds is probably longer. I could probably do it in about 5, but the strategy that we employ, right? Remember, at the end of the day, the reason why we're all here is we want to do this so we can make money and we can buy back our money and we can buy back our time. And this is really what it's about. You know, we do long-term trend trading. You know, we do like 20 minutes a day on the charts, and then we set our trade, and then the rest of the day is ours. We can do what we want with the rest of the day. You know, I don't encourage sitting there in front of screens all day, because, you know, you're just exchanging your 9 to 5 for another job. You know, this is not supposed to be a job. This is supposed to be an investment. And the investment is supposed to buy back your time, right? What we do, 20 minutes a day. You know, you come and look at the chart, 20 minutes. As I said, you know, if I give you a stock list of a list of different stocks for you to analyze, which is great stocks, you know, you want to be able to flick through these stocks, you know, in 5 seconds, 10 seconds, if that. So this is where when I say it's 20 minutes a day, you know, you can look at these charts quickly and flick through it. You know, we're talking about speed and accuracy. You understand what it is, bam, bam. What is it telling me? I can tell. Invest, don't invest, don't invest, don't invest, invest, don't invest, invest. You want to be able to do those things really quick. And this is what the indicators help you to do, right? But again, the indicators are just representations of what price is doing stuff. It's an easier way to read them. And, you know, so I have to teach you what each of these indicators mean and what they're doing and why we do it, and why all of those elements build a wholesome strategy in order for you to understand, in order for you to then put your money in and invest and feel comfortable. Because at the end of the day, it's you that are putting your money in there, and you have to feel comfortable with it. So that's why I have to break down each of these elements of all of these strategies. So yes, it is, you know, beginner friendly, but also if you've been trading for some time as well, you know, it's just easier for you to understand the principles, for you to then, you know, adopt the trading strategy and utilize the different instruments, right? All right, so we're coming up to, is it 4 minutes left, 3 minutes left? Is there any last questions before we go? Remember, I'm going to be here every Sunday, same time. This is what, 8 p.m. UK time. I think it's 3 p.m. Eastern. I think that's 11. Is it 11 Pacific? If my time is correct. Yeah, again, if you haven't liked the stream, please like the stream. Share the stream again. What time on Sunday? So here in the UK, it's nearly 10 p.m. So I started for 2 hours. So I've been on for 2 hours. So count back 2 hours from where you are now, and that is when I'll be on. So I think that's, so correct me if I'm wrong. If I'm wrong, yeah, correct me if I'm wrong. It's 3 p.m. Eastern, right? I think that's correct. So right now, currently the time Eastern would be 5 p.m. It's 5 p.m. Eastern now, right? I think. Am I correct? Give me a signal if I'm correct with the time. It's currently coming up to 5 p.m. Eastern, I think. So I'm gonna say I'm gonna think it's 5 p.m. Eastern, 8 p.m. UK time. I think that's 11 p.m. Pacific time. Yeah. See, they said yes. Thank you. I can see that. Yeah, yeah. I'm struggling with all of these clocks going back. Yeah, 5 p.m. Yeah, I'm struggling with all these clocks going back and forth. Right. So yeah. So every Sunday I'm gonna be doing these sessions. All right. So yeah, if you haven't done, please again like the stream. Any final questions before I go? Anybody have any questions? Anything you want to look at quickly in my final minute? I give you guys a few seconds if you want to put. Yeah, 5 p.m. Eastern, 4 p.m. Central, 3 p.m. Mountain, 2 p.m. Pacific. There you go, Mo. Thank you. Let me put it on screen so we know. Yeah. So yeah, so that's the aim for every Sunday. We're going to be looking at the stocks. Again, if there's anything you guys want me to look at, any stocks, you can put them in the chat. We'll analyze them. We'll go through, we'll break them down. Any kind of principles, anything that's on your radars, you guys can kind of come with your questions, and we can go in. We can start breaking it down and going through it. Again, the the website is focusoninvesting.io. That's where we have our full investment syllabus. Again, subscribe if you haven't done so. If you'd like to support the stream, the Cash App is at the bottom, British pound sign focus on investing, or paypal.me/focus on investing. And yeah, I just thank you guys for joining me. Until next time, this time next week. Take care and peace.